Well, let's move on then. Astral, that's a stock on our radar for Q1. Their revenue has come in line, but margins have contracted a little bit. Realizations as well a little bit lower. The EBITDA also missed expectations. Well, to understand what's the way ahead, we're joined with Mr. Savlani, the Executive Director and Chief Financial Officer at the company. Hi, Mr. Savlani. Good morning. Thanks so much for joining in. Well, let's focus on your pipes business first. For the first quarter, I think the value was much lower than volume growth due to reduction in PVC prices, obviously. So tell us, what is the volume growth we should be looking at for this year? That's for FY24. I think earlier you were guiding for mid-teens. And also it appears that your growth in the first quarter was a little bit slower than, say, Supreme Industries. What is your market share?
So first quarter, the volume growth was 31%, which was a very, very robust. Secondly, we should also understand that the Astral is predominantly a plumbing company. The sizable volume which is coming in the market to the other competitor, that is mainly from the agricultural business, where the Astral presence is very, very low. So that is the reason compared to other, you feel that is otherwise in a plumbing side, I think we are perhaps having highest volume right now in the industry. So volumes were very, very healthy. And you rightly said that the top line was low because of the polymer effect. Now the polymer have started inching up. So in the coming quarter, you will see slowly and gradually the value growth will come back. Margins were also very, very decent, I can say. If you compare with any of our peers, we were the highest in the industry. So margin front also, we are very, very happy with the performance. And in the coming time also, the way volume have started coming back, we are seeing that in the coming quarter, volume can be very, very robust because the way the year has started and the way this current quarter also, first almost 40 days, we have crossed 40, 45 days. The numbers are moving in the same direction what we have seen in the Q1. So I think we are very, very excited with the performance of the company.
Thanks, Mr. Savlani, for giving us that clarification, because in your core business, you're not losing market share. In fact, you're seeing the volume growth is as much. So we get that. But for the year, what kind of a volume growth are you targeting? You stick to mid-teens, or since Q1 has been good, the first 40 days of Q2 has been fairly good, you want to revise that number upwards? What should the range be, volume growth?
So I think we have given the guidance of 15% on a full year basis, but the way numbers are moving for the first, I think, quarter and the first 45 days of current, I think it should be much, much higher. But keep finger crossed. Once we will be completing Q2, we will be revising upward our guidance.
So Q2 so far, Mr. Savlani, has been running at 30%? Same run rate?
Yes, 30% plus.
Okay, so it'll be, and you said at the end of Q2, you will revise your guidance upwards.
Yes, yes.
Okay. It should be at least a 5 percentage point increase, right? If not more.
Let me complete the Q2. I think it will be a surprise to the market.
Okay. Mr. Savlani, could you talk to us a little bit about margins and how they are likely to pan out? What's the guidance there?
I think margin we already given 16 to 18% zone, and we are on the upper end right now. So I don't see any problem. In spite of lower polymer price was there, we have maintained our margin. So coming time when our main seasonal business quarters will start from October onward, I think there the contribution of value-added product is always high. If you see the history of last 10, 15 years, contribution from our main core product CPVC and the value-added product is always high. You see the Q4 number also, our margins were 20% plus. So I think in the coming time, we are seeing that once the value-added product contribution will start in the coming quarter, margin can even improve from here.
What's the contribution of the value-added products? And by when do you expect it to significantly scale up? And what would be the long-term margins? Currently, for this year, 16 to 18% is your margin guidance. But can you just stretch the horizon a bit and tell us what would your aspiration be?
So we have given the long-term guidance only 16 to 18% because the polymer is always highly volatile. So in that environment, giving a higher guidance, it is always a painful. So we don't want to unnecessarily create a grapevine in the market or unnecessarily misguide any of the investors. That's why we are always conservatively giving guidance. But yes, definitely we will try our best. If you see the history of last 3-4 years, we are always on the higher end. So we will try our best to fetch higher margin. But this will be the broader range. That is what we have given the guidance.
Okay. All right. Well, Mr. Savlani, by your own admission, selling of bathware as well as faucetware is a little tougher, right, than selling pipes. how do you see the sanitaryware as well as faucet business shaping up? What could the revenue potential be? For this year, what is the target? And going ahead, how do you see this business scaling up?
So any new vertical is always a tough. It's
Indeed.
nothing easy.
Indeed.
Nothing easy in the business. So definitely it is a tough. But I think the way brand is there, the way Astral brand is strong in the market, we are quite confident that this segment will also give us a good number. I think in the very first year, we have still not completed 1 year. We have crossed the 5 crore run rate for the last 3 months. So I think it is shaping up very well. We have created more than 500 showrooms plus touch points in India, and another few are in the pipeline. So I think we are going in the right direction. We don't want to unnecessarily jump in a fast volume growth, and then there is the problem. So we are going very, very steadily, and after understanding the market, we are moving in the right direction. So I think once the project business will start coming to the system, I think volume will shoot up there also. I think it will take another 12 months time to pick up the volume, but we are confident that slowly and gradually we will take this business also to the new scale.
So currently you're doing 15 crores per quarter, right? In terms of revenues?
Yeah. Yes.
And so say in the next few quarters, how do you see this number scaling up on a quarterly run rate? What should it look like?
So I think every quarter, next 6-7 quarter, every quarter you will see there will be improvement.
Mr. Savlani, I think you said this business, the new business will contribute 1,500 crores in the medium term. I think that's the number that you put out.
Yeah, for 5 years, next 5 years.
Over the next 5 years. Okay, and much higher margin business here, right?
So initially not, because initially the scale will not be there.
Of course.
So margin will not be that equivalent to our current business. But once they will reach at a certain scale, then definitely it will be contributing higher.
All right.
Just one final question, sir. You've incurred an inventory loss in the current quarter of, I think, 15-17 crore. Thereabout. Is this something which will persist?
I don't think so. It will be there because now the polymer prices have started going up. If it will further go up, it can be inventory gain also in the coming quarter.
Okay. All right. Mr. Savlani, you have a capex, I think, of around 350 crores for this year. For next year as well, you have around 250 crores. And you have expansions, in various units, whether it's Guwahati, Hyderabad, Kanpur as well. I think your current capacity is around 290,000 odd. Given by, going by what you're doing in your core business as well as the diversification, the sanitaryware as well as faucet business, where do you see your revenue potential, the peak potential? Give us a 3-year time horizon. How do you see this ramping up? As of last year, your revenues were around 5,200 crores ballpark, with 18 to 16% margins on. So how do you see the revenue scale up? In 3 years, where should it be?
So I think we have given a guidance for next 5 years for 15% CAGR, and we are standby with that guidance. But the way demand is shooting up in the piping sector, I think are very, very excited. And that is the reason you see in the history, Astral has never ever done an announcement of 3 plants at a time. So this is the first time that we are putting up 3 plants at a time. And that is what showing the confidence of the management. The coming time, we are expecting the pipe business to do really good for our organization. And the number can be upward direction also. But because once this plant will be commissioned, then only we will be capturing the new geographies, and then we will be taking the market share in that particular geography. So keep finger crossed. Once this expansion activity will get over, we are very, very excited right now to come as early as possible, because we have already allocated the sizable, money to our other businesses. So now new capital is not going to be contributed to our other businesses. Maximum contribution will go to the pipe. There we are seeing a very, very robust demand, and we are continuously getting the market share, which you can see for last 3-4 years number. And we are very confident that in coming time also we will gain further market share in next 2 to 3 years time.
So we're going at 15% CAGR, say in the next 5 years, say by 2027, 28, revenue should be at 10,500 crores approximately, just going by that calculation?
Hypothetically, 15% CAGR means every 5 years you are doubling your revenue. So naturally 10,000 crores.
And you don't have to put any more capex for that?
I think normal capex will be there, will not be a substantially high capex, and we company sitting with sizable cash, so that is not a problem to the organization. We are a debt-free company.
Got it.
Thank you, Mr. Savlani, for joining in. Wish you all the very best.